Alright folks, welcome to episode 2 of the Array Archive series. In this episode, we're going to be going over the PD array matrix. As you can see here in the top right corner, we have a gigantic picture which clearly says PD array matrix. What the PD array matrix does, or what it, I guess you can say, tells you, is it shows you the significance of each PD array on like a certain scale, like which PD arrays are stronger than others in a sense, okay? But this can be used in not so many other different ways, but for me, just two. One, as I just mentioned, the significance and the strength of each PD array, like which PD array is stronger than another. And second, in the situation where there's multiple different PD arrays in the same price swing, you can use the PD array matrix to see, which PD array should I use to enter on, or which PD array should I expect to be disrespected, or just which PD array should be referenced to, in a sense. Those are the two ways you can use it. So right off the bat, we're going to go over the first, way to use the matrix, which is the strength of each PD array. So as you can see here, it's from top to bottom, so strongest to weakest. The strongest being the mitigation block, and the weakest being the old lower high. See, now we're going to replace the old lower high with the volume imbalance. Okay, so just go ahead and, I wish I could crop that out, but we're going to ignore that and we're going to replace that with volume imbalance. Okay, so from strongest to weakest, we're starting with the strongest. Mitigation block, breaker, liquidity void, fair value gap, order block, rejection block, and volume imbalance. Reason I what's the word, excluded the old high or low is because it's just too weak of a PD array. It doesn't make any sense. Price runs, touches, hits old lows and highs constantly, so the bandwidth of that just like appearing and happening is way too high. So we're not even gonna pay attention to old lower high, and we're gonna replace it with the good old volume balance, the weakest confluence, but also the strongest PD arrays that can. I'll explain about why later in the episode that I actually go over volume balance. But yeah, that's how you use the PD array matrix. So you know the significance of each PD array, what's the strongest, what's the weakest. But now I'm going to show you some situations where you have multiple different PD arrays, right? And they each have a different level of strength or significance. So you have to look at the PD array matrix, or if you remember it, you picture it in your head and like, okay, this is that's stronger than this is that. So for example, right, let's see what we have here. Mind you, this might just be a raw recording. Can I delete this? Probably can. I just put it to the side. But this is a straight raw recording, so I didn't pull up a specific example, so I might just have to look for one real quick. Let's see here. Yeah, okay, so we have, from what I'm seeing, I see a order block here. We have an order block, and then we have a bunch of fair value gaps here, in which I don't think I need to mark because they're pretty huge. So we have an order block. We have a fair value gap. And mind you, I'm assuming you don't know what this is yet, because if you're here, you're willing to learn what the arrays are. So when I start saying mitigation block, volume balance, order block, all that, don't even trip out. Okay, don't even trip out. So we have two fair value gaps. Might as well just delete this one. And we have an order block. Now, we're going to refer to the PD array matrix, okay? We have an order block. For example, if we want to see price continue lower, all right, and that's what we're seeing here. We want to find a bearish PD array, and that's what we're looking at. We're looking at a bearish order block and a bearish fair value gap. Looking at the PD array matrix, which one is stronger? The fair value gap or the order block? Let me mark this as order block, not order block, but fair value gap, so you won't get confused. So which one is stronger according to the matrix, the fair value gap or the order block? Well, the fair value gap is on top of the order block, so that means the fair value gap is stronger. What this means in this scenario over here, right? Price is not going to reach all the way up here into this order block. It's not. Why? Because, okay, think of it as this, right? If I can give you a little analogy. If you can, I don't know, let's refer to a character in a game. If a character in the game has 7 strength, right? And it's 5,000 tokens. But there's another character that has 9 strength and is only 3,000 tokens. Which one are you going to buy? Obviously the one with the 9 strength and only costs 3,000 tokens, right? Whoa. I got something in my throat. Holy, I'm going to keep this recording going, though. So, think of it as that. Since the fair value gap is the stronger PD array, it's not going to take its time and go all the way up to this order block. It just doesn't make any sense. Price is going to go to the stronger and closer PD array and use that as a reference. Does it do that? Well, if we drag it over, yeah, it does that. It hits the fair value gap. It continues lower. And mind you, this is recent price action. This is like today, like right now, at the time of this recording. price has not touched the order block yet. There's a lot of different examples of this. Okay, lots of different examples. But this is just if the stronger PD rate is closer. What if it was reversed? As in, the stronger PD rate is farther, but a weaker PD rate is closer. Now, let's actually try to find an example of that. I'm gonna pull this picture up maybe in a minute. So let's see here. Where can I find an example of a stronger and then a weaker being close by? Let's see. So we have a mitigation block right about here. There's that mitigation. And then we have a fair value gap right here. Remember, I'm assuming you don't know this yet, so don't even worry about if, oh, what's a mitigation block? What's a fair value gap? I'm just showing you examples of stronger PD rays and how, stronger and weaker PD rays in certain proximities and how they can be used. Now, when it comes to this situation, when you have a stronger PD ray below, or I guess you can say that's farther away from price, there's two things, or matter of fact, a couple things that can happen. One, the stronger PD ray is already used. That's one thing. Two, price will visit the stronger PD ray first, right? It'll visit it, exhaust it, and then come back down, hit the fair value gap, and then go. Or what it can also do, and that's the third example here, it comes down, fails to reach it. If it fails to reach it at first, and price is already, ready to deliver, it's going to hit the fair value gap first, because it's like, man, we don't got all day to go all the way down here. It doesn't make any sense. It just doesn't. Like, for example, a marathon, right? If you use all your energy at the first part of the marathon, you're barely gonna be able to run for the rest of the marathon, are you? No. If you sprint for 5 minutes straight, you might pass out. you still got a whole 10 miles left, but you only ran 2 miles. All your energy is gone. So think of it as that. Price is not gonna sit here and run all the way back down to this mitigation block when it's already 9:30, the market's open, and price has to deliver. It has to do it ASAP. So think of it as that. And if price tries to come down to it and still fails multiple times, if it does it multiple times, then just know that it's likely that's not going to come here. You can still keep it on your chart just to surveil it and see if price does come down there in the future. But in that case, just leave it alone. Look for the PD rays. It can be a weaker PD ray, or it can be another mitigation block if another one forms. But as you can see here, it also deals with time. Like I said, when price is ready to deliver, it's not going to spend so much time or exhaust itself by going all the way down to this mitigation. Because mind you, when it hit this fair value gap, it was after 9:30. Yeah, notice that. It was after 9:30. And we're gonna find one more example if I can find one, because I'm just doing this just off the rip. I'm not even I'm just doing it off rip, man. I'm literally just so unprofessional with it. Yeah, I'm so unprofitable, guys. I do not know what I'm doing. Okay, here we go. So if I can find anything around here, we have a order block right here, and then we have a breaker. We have a breaker and a order block. That is pretty weird if I do say so myself. My goodness. Okay, so we have a stronger PD ray right here, which is the mitigation block, and then we have a order block right here. Both of them get hit, but there's something that happens here. The mitigation block gets violated. You will learn how that happens in the future. But this candle's closing right here, if we pull that out, that would be the mitigation block. It gets violated on this down candle, breaking this lower here, it gets violated. So if this gets violated, what is price going to hit? It's going to hit the next strongest PD ray, which is the order block. Yay! Or the breaker. That's the second strongest. See that right there? This is a breaker. Price hits both of them since they're in proximity. Like they're literally inside of each other. So price is bound to hit both of them, no matter how far it traces. It could have went down into it for like a little tick and then shot higher just to avoid the order block. But to confirm institutional sponsorship, it had to drop down into that order block. So the algorithm was like, okay, we're good, let's do this. And then it finally delivers higher. So I don't want to give too many examples because I don't want to make these episodes super long. Because, hey, it might be a beginner that's only 2 months into trading watching this. So anyway, I'll be in this video here. I'm not going to make it over 20 minutes long as I usually do. I hope I taught you this well. I hope you can use it when it comes to these algorithmically rigged markets and, Goldman Sachs, JP Morgan, all that. Anyway, I'll see you guys in the next episode. Good luck and good trading.